Hey there, everybody. Welcome back to FinBear channel. Right now, we are going to go over Clover Health Investments. For those of you who don't know, Clover had a really big day. Actually, had a really big week this week. With Tuesday and Wednesday, it going over 100% of its value, and then subsequently dropping about 15% from there. As you can see right here, even in the Ortex chart, a massive gap up. And that always concerns me because gaps do have to fill, although there is no timeline on that. What's interesting here is we look at the Ortex data. So 2 days ago, the Ortex data says that the short interest of this stock was 44.85%, and it was currently 100% utilized. So yeah, it popped. When you get 100% utilization with a high short interest, things are going to happen. Do not be surprised, however, that in the next 2 days, as Ortex data updates, to see that this number is going to change. This current short interest should probably be going down because of all of the buying that happened. As you can see here, short interest decreased 5.53% on Tuesday alone, where the net borrow change was 3.21 million returned. Which is a good reason to understand why the price is now coming back down. And that is because there's more shares available. Utilization is no longer going to be 100%. If we had the Ortex data that actually reflects for today, do not be surprised to see that number going down a good chunk. And, we'll do an update and we'll be able to see that. So with all that being said, let's look at the chart. This is not an old company as far as the NASDAQ is concerned and the stock exchange. So as we see here, we have a strong area of support that they have maintained for a very long time. They broke out up here, found a new area of resistance, came back down, went past that previous level of support, retested that area, that support that became resistance, failed, came all the way down. Then they blew past not only that resistance line that previously failed twice, they then blew past the other resistance line that failed 1, 2, 3, 4, 5, 6, 7 times. These are daily candles. Daily candles are very strong indicators long term. When they touch a certain price point, the more they touch it, the stronger that area of support and resistance is. So that gives you an indication here that this was some interesting things happening here. It took a lot of momentum. Look at that volume for that day. That volume, if that's not indicative of a pump and dump, I don't know what is. It actually hit, so I wish I could show you guys, because when I move this, all right, look at this number in a moment, all right, as I move my mouse back, because when I move the mouse, it changes the number. Okay, so we're back at it. So the average volume for this candle, for this company to trade on a daily basis, is 57 million shares exchanging hands. On this day, 735 million were bought and traded. 735 million. That's a lot. And what I also find interesting is, mainstream media is talking about Clover. There are a lot of people, there are a lot of retail investors involved in Clover. I know that the ape community and everything with AMC and GameStop, they're saying, oh, Clover is a distraction. It's to devise us, to have us go after that instead of buying AMC and GameStop. And I totally understand what they're trying to do. It is a financial protest with those two stocks. But there are other valid retail investors that are in these stocks, people I know that bought in during that jump. And it has me a little concerned for them, because I hope that they did sell as they made their huge returns and their gains. Because when you go up 100% in a day or so and gains with 700%, like in AMC, again, AMC is a different situation because we're buying and holding to the moon. But in most cases, when you see a huge day like that, take your profits, because it's going to have to correct itself and retrace, which is exactly what we see here. And there are gaps. You can't see on the daily. Let's see if we can see it on that hourly. Or actually, let's look at the 15-minute. It's going to look crazy, isn't it? Oh, it doesn't look as crazy as normal. Uh, there's probably gaps. We saw in the Ortex data, we might have to go even to the 5-minute. But typically when you see movement like that, there are gaps galore. Let's look at, we'll go down to the 5-minute. It's only 3 days ago. Bear with me. Oh, unless it's repainted, I stand corrected. There does not appear to be any gaps. All right, then that makes me happy for everybody. That definitely does. I stand corrected. Typically, when you see action like that, you will see gaps happening. And unless this repaints when looking back, which I don't believe it does. Okay, then. See, sometimes it's good to be wrong. I would rather be wrong, especially when it comes to other people's money that are invested in things like this, because I'm not personally invested. But I have friends that are, and I care about them and their ability to make money and thrive in this market. Okay, so that's good. So I don't see gaps. That is a huge relief because, again, gaps always have to close. I'm not sure why Ortex was showing that gap because, as we did see right here, there was a huge gap from right here to there. If I move the mouse over, it'll block it. But if you look at the bottom of that green candle, to the right of my cursor and all the way down here is a candle previous, all that black space is a gap. And here, if you look at this red candle on this chart, so it's saying that price closed on this candle here, and then price opened up here and came down. So there's another gap. But TradingView is not showing it. Maybe you guys see it on Webull or the other charts that you use. If you do see a gap, be concerned because it's got to close it. It's got to close it. And what's actually cool about this is this red gap, that's got to be closed too, going back up, which is nice. Definitely nice. So this, as you see, it came up here. It closed that back down. It might go back down to this. What's this saying right here? This is not the best way to look at price or text. Just putting that out there, guys. Help us out. Let's see, the high of this candle, it says, was $12. So there's a possibility that this price action couldn't go back down to $12. We're at 14 now. That's not going to kill anybody, depending unless you bought it up much higher. Let's see what happens over the next few days. I think that it's going to retest its historic points that it already had established. There's a reason why it was staying within those boundaries. And if I could get my computer to go a little bit faster, I can zoom this out so we can see it again. There we go, because this is the I want the daily. Apologies. Daily, there we go. I love the daily candle. I see so much more when I zoom out. Let's condense this just a little bit. Let's go back to the forward in time. There we go. So as you can see here, price dipped below that previous resistance line. So it's maybe going to be a support for us. We might see a little bit of yo-yo action. Part of me feels like it's going to come back down here and retest down here and make this our support again. It just seems more natural and makes more sense, unless there's some really massive, bullish, exciting news happening about this company that will change my mind. So that is my analysis on it. As you can see, Stoch is looking like it's ready to come down a bit as well. RSI is definitely overheated. I actually made this trend line for everybody to see on the RSI line. It has peaked out at the exact same spot 3 times. 3 times. And we can see from previously what happens when it does that. So those are my thoughts on this chart. Please let me know yours. You guys might know something more than I do, which is why we have this channel, so we can communicate and grow together. I hope you enjoyed the video. I hope you enjoyed the channel. Please hit like and subscribe. Please share with your friends. Let's do amazing things together and have a wonderful day and go make some money.